Is your real estate brokerage growing rapidly right now, but your front-end success is breaking your back-office accounting systems? As a brokerage owner, you face a constant tension between wanting control over your operations and dealing with the friction that comes with trying to scale them. In the early days, hiring a generalist bookkeeper or keeping accounting in-house makes sense. It saves direct capital and avoids the initial work of migrating your software. But as transaction volume and complex commission splits grow, this approach creates a backlog of data gaps and errors that accumulate as you grow. Eventually, the ceiling on your growth is dictated by your back-office infrastructure, not your lead generation. This graph maps time against growth. The green line represents brokerage revenue climbing upward. At first, administrative workload tracks below revenue, but with manual accounting, back-office complexity eventually crosses over the revenue line. We call this expanding gap the operational blind spot. Operating inside this gap means you are making strategic growth decisions based on outdated or incorrect financial numbers. To find out if your brokerage is trapped in this blind spot, you need to evaluate your operations against 5 specific stress tests. This is our brokerage diagnostic scorecard. The first test is whether your financial reports are consistently delayed by more than 15 days. When generic bookkeepers try to process high-volume, multi-tier commission splits using basic ledgers, the math often takes weeks to finalize. Without timely data, you lose the ability to forecast your cash flow. You end up trying to drive the business forward while looking in the rearview mirror. The second test evaluates your data integrity, specifically how often you deal with recurring errors. If your admins are manually reconciling split commissions across different spreadsheets, you will see data mismatches and unbalanced ledgers. Instead of leading your agents, you end up spending your most valuable hours hunting down missing cents in a spreadsheet. Saving money on payroll by avoiding specialized accounting creates a time tax that drains your leadership bandwidth and reduces your confidence in the data. Returning to the scorecard, the third sign focuses on your software infrastructure. Fragmented systems. It is common for growing brokerages to run a CRM, a separate transaction management platform, and a generic accounting ledger that do not communicate with each other. This disconnect forces your staff to manually enter the same transaction data into multiple platforms over and over again. Skipping a proper software integration saves you from upfront friction, but it limits how many transactions your current staff can actually process. When systems are fragmented, your employees stop being drivers of growth. They become human glue, forced to act as manual bridges between disconnected software. Looking at the fourth item on our scorecard, we test for unclear cash flow visibility. Using generic cash basis accounting might work for a small operation, but it is insufficient for property management or complex real estate portfolios. Without specialized accounting, your actual liquid cash is obscured by escrow accounts and pending payouts, making growth planning hazardous. This leads directly to the final test, overwhelming compliance preparation. Non-specialized accounting increases the difficulty of tax preparation, reporting requirements, and audit risks. When your underlying ledger is filled with manual errors, the end-of-year compliance push turns into an expensive scramble. Ignoring these signs turns low monthly accounting fees into a liability that can compromise your brokerage's legal standing and financial stability. To determine your next step, we use this scenario match matrix, plotting transaction complexity against your growth goals. If you recognized 3 or more of the diagnostic signs we covered, your current accounting setup is an active liability. For the bootstrapped grower, brokerages with low complexity right now, but a goal to scale rapidly, outsourced accounting is the recommended path. Moving to specialized accounting provides institutional-grade financial reporting from the start. Paying for scalable infrastructure early ensures you carry 0 operational debt when you double your agent count. Finally, we have the scaling operator, those managing complex commission splits and multiple property portfolios. For these operators, specialized real estate accounting services function as the required foundation for managing high-volume transactions. We acknowledge the reality. Untangling fragmented systems takes a 30 to 60-day onboarding phase. This process involves mapping your transaction fields to your ledger and automating your specific commission rules. This removes the manual bridges and gives you a view of your cash flow based on real-time data. Do not let back-office bottlenecks dictate your front-office growth. Invest in the systems your future brokerage requires to scale safely.